Hey everybody, Boris last week, BK Forex. Welcome to the commodity dollar weekly update for Aussie dollar, dollar CAD, and Kiwi dollar for Jan 30th to February 3rd. Definitely going to be a more volatile week for the COM dollars as well, but they still remain the low volatility trade. They still remain the much tighter, tidier type of a trade. Sort of really, for the last week or so, it's been a 50-point move per day in the Aussie dollar versus, say, a 100-point move in the dollar yen, perhaps even 150-point moves in the euro dollar and dollar yen. So volatility has been approximately half of what it's been in the majors, and I think that's going to remain the trend, even though there is much more news on the front. We do have essentially the same levels as last week: 76 to 74 in Aussie, 32 to 34 in Caddy, and Kiwi at 73 to 71. Let's take a look at the charts here, and then we'll just go through the economic data set. The chart, I think, that's interesting because the breakout above the 75 was definitely a very key tell that this uptrend, or sort of the 74, what's the 75 over here, very much a key tell that the uptrend remains in place. That this particular resistance definitely was overcome, not with a great amount of force, but overcome nevertheless. And it looks to me like basically Aussie remains a buy to dip with a support at 74.50. That's really the critical support here. If that breaks to the downside, then you clearly have a broken a swing high here that's fading. But up until 74.50, Aussie to me still remains very much a buy to dip trade. The breakout here, of course, is this 76 immediately. But the really big target once the 76 goes becomes that whole 76.50, 77.50. That's been a quadruple top level. As a matter of fact, if I could just pull back, you can see it's been a massively distributive level all the way from the beginning of last year. And that is going to be, I think, a much harder level for Aussie to overcome. But it doesn't mean that it doesn't have a chance to reach that level. Sorry, I'm just trying to get a good visual here. It doesn't mean that it doesn't have a reasonable chance to reach this level. And this, what would really require Aussie to power up here? It would probably be a combo of both, a more dovish than expected Fed and a less dovish than expected RBA, both of which are on deck this week. And I think that's going to be a very interesting trade. If we have the reverse structure, if the Fed seems just sort of unambiguously hawkish and looking for a 3-rate hike, we definitely can get this thing tested at 74.50. That is, Aussie tested down to 74.50. But the interesting thing then, to me, is going to be how well it trades there. If it finds, if it tests it and comes back up above it, that would suggest that the uptrend still may very well be in place. A hard break through 74.50 definitely connotes that this has been a swing high. I still remain on the side of buying the dip here. But if the data or if the sentiment changes from the central banks, then you have to really kind of bail out if 74.50 is given with any kind of definitive way. Dollar CAD is clearly finding support here at this 130 level. Now, I like dollar CAD to the upside. In other words, of all the COM dollars, I think the Canadian dollar is the weakest for a couple of reasons. You have a much more than expected dovish monetary policy, with Governor Polis basically saying a week ago that they're open to the idea of a rate cut. You have all this tumult and uncertainty surrounding NAFTA, and Canada being sort of a drive-by victim of all of the tension on the other side of the border with Mexico. And most importantly, and this is the reason why I like CAD, dollar CAD to the upside, CAD to the downside, is oil is really having a hard time at holding this 50 level. To me, if oil starts to wobble below the 50 level, that really creates an upward trend in dollar CAD. 130.50 clearly very strong support, and this presents one of the stronger relative weakness trades in the currency market. When we'll take a look at the crosses, we'll definitely be featuring CAD as a relative weakness trade, in my opinion. So for all those reasons, there's quite potential here for maybe more upside in dollar CAD to 32.50, irrespective of whatever happens to the other currencies. If, on the other hand, by the way, and furthermore, by the way, if FOMC is hawkish, that's going to be a good trade. Dollar CAD to the upside will definitely be a good trade off of a FOMC move. Last but not least, Kiwi dollar. We have labor data coming up. Kiwi dollar looks very good. Looks even better than Aussie in terms of presenting this very strong uptrend. The lows remain high. It's higher lows. The 73 is still very much a key resist. But if we bust through 73, let's say we hit 73.25. At that point, you really have to buy the dips and look for a 74 target. 74, of course, going to be very similar to the 77 level in Aussie. Those are all really, really huge, important long-term resistance levels, and it's going to be much harder push to get through those. But from here to there, there's still quite a lot of pippages, and that could be the trade as we go forward next week. Wish you guys the best of luck, the best trading. Boris Landsberg over and out.